All right, time for another episode of Random Thoughts, McCrae's Mind, the worst video channel on YouTube. And today we're going to be talking about whether or not the Federal Reserve is going to do away with the Fed put. So I've been watching quite a bit of commentary about the Federal Reserve's intentions with interest rates. And so there are a lot of prominent people that are making the argument that the Federal Reserve wants to do away with the perception of the Fed put. So what is the Fed put? That's what I've been talking about on this channel, that the Federal Reserve likes to jack up the stock market to get growth in the economy, and they've been using what they call the Fed put to ride to the rescue of the stock market. Anytime it goes down, they'll come in, they'll lower rates, and they'll say, hey, buy stocks, that's basically what they want people to do. Buy stocks, jack up the stock market, get some growth going by getting the market up. That increases people's spending, and you get a better economy. So we've been operating under this premise for basically the last 22 years. And so it's become a real problem now for the Federal Reserve. And I think people are right that the Fed wants to do away with the idea of the Fed put. But the question is, are they going to do away with the Fed put? Is that their intention? And I don't think it's their intention, but I do think they want to break that perception, at least temporarily, right? Because what they're trying to do is to get the stock market to come down, but it's not coming down. It's going back up now. And that's really pretty embarrassing for the Federal Reserve. Basically the market is mocking them. They're just saying, no, you're not going to go follow through with this. We're going to buy stocks, and you're going to take us for a ride. We know you're going to do it, right? So this is really, that's a humiliation for the Federal Reserve. Their bluff is getting called, so to speak. Maybe a bluff, may not be. But so the idea is that people are saying, no, we have not reached the lows because the Federal Reserve wants to do away with the Fed put. And, I think that's somewhat true. The Federal Reserve does want the stock market to go down because they've gotten themselves into this problem where the stock market and the asset markets, all the markets are too high. They're creating the inflation, right? All this inflation has basically been created by the Federal Reserve's policy of trying to jack up the stock market. And they want that idea to come to an end. Now, these people are saying they want it to come to a permanent end, which, I think the Federal Reserve probably would like for it to come to a permanent end. The problem is, and this is always the problem for government, it's just like government spending. People think that, the governments just want to spend money. Governments do not want to spend money. They don't want to spend money at all. They have to spend money. They have to keep people appeased. They have to give the rich people their subsidies, and if you give rich people subsidies, they got to give other people subsidies to keep them voting, to keep them in office, or else, everything, all the rich people's assets go away eventually. So that's the reason you get so much government spending. You got too many people to appease. Like I said, inflation, in the one video about inflation is the problem of having to appease too many people. So the Federal Reserve jacked the markets up to such a high rate that people really started going gonzo. We had all of this free money from the stimulus plans. We had the problems with supply chains. We had the overvalued stock market, Bitcoin going through the roof. All these things came together at once and created this shocking level of inflation at 9%, which totally surprised the Federal Reserve. They did not see that coming. And so now they're trying to fix it. They want the primary way they're going to fix it is to get the stock market to go down, but they can't get it to go down because inflation is starting to come down and people are starting to recognize, hey, the market's been down, it's time for it to go back up. We're buying stocks. So that just creates a problem with inflation. It just keeps, the Federal Reserve can't solve its problem because they need the markets to go down to get people to stop spending so much money. So that's ultimately the problem that the Federal Reserve is going to have. Is like, let's say that they are successful in knocking the stock market down. Let's say it goes down to 3,300 on the S&P 500, which would be I don't know what's 700. 20% or something like that. Something about 15%. Whatever it would be from this point. Let's say that were to happen. Now, 3,300, you would probably start having some real economic problems. Probably people would start reining in their spending pretty significantly. And that's the point where the Federal Reserve would be up against it. That's where the people who are arguing that the Federal Reserve is not going to do anything with rates are making the argument that no, they wanted to just go way down. They wanted to go down to like 2,800 or whatever. They're not going to take their foot off the gas or off the brake, depending on the way that you look at it. They really have their foot on the brake. They're not going to take their foot off the brake of the economy. They're going to hammer it down until they get things the way they want, and that people give up on the stock market and them saving the stock market, which is not going to happen. That is absolutely not going to happen. As soon as there's a problem with the economy that's significant, that growth is not what people expect, what they want, not what the stock market wants. At a certain point, they're going to say, okay, we're lowering rates now, or buy those stocks, let's go, let's get this economy going. So that's the kind of loop that we're in, that I talk about when I say interest rates are never going to increase in your lifetime. The rates are starting to come down now. Stock market's starting to go up. And that's the whole problem with the future returns of the stock market, is that the asset levels are very high now, so we don't have a lot of growth ahead of us in the future in terms of valuation, and probably earnings are going to decline more than expected, because you have this real issue with the economy slowing down because of the Federal Reserve really trying to hammer down inflation. And the only way they can do that is to get asset prices down and get the economy slowed down, which, they're going to do that eventually. They're going to raise rates to the point that the economy eventually slows. So the question is, what do they do if, the market continues to call their bluff here and it remains high, but the Federal Reserve wants the market to come down, but interest rates are such that they need to lower interest rates anyway. What are they going to do? Well, they're going to lower interest rates. They're going to decide, okay, we got to do this. We're in too much hot water. The economy's not going to do well at all. We're getting a lot of pressure. They're not going to be able to just take a jackhammer or a sledgehammer, take a sledgehammer to the economy and just smash it to smithereens to get the stock market and to have people forget about the idea of the so-called the Fed put. Right? That's not something they're going to do. They're not that committed to the Fed put. They're basically looking to for the market to temporarily lose the idea of the Fed put, which it's not doing, obviously. Market's way up today. It's up on the idea that the Fed's going to cut rates to get the economy going, which not necessarily the Fed put, because normally the Fed is really jacking up the stock market to try to get growth, which is not what they're trying to do here. So this is a little bit of a different situation. The market is going up because they're expecting the Fed to cut rates, and then as a result of that, people just think people will buy stocks because rates are going down, and that's probably true. That's probably what will happen, temporarily, and unless and then we'll, what the level of the stock market will be from that point on will be determined on what actually happens with the economy, since the Federal Reserve is probably not going to take rates to zero for a long time to come unless we really have problems with the economy, in which case stocks will have to come down because the earnings just will not be there. So that's the question of the day today. What's going to happen with the economy? Is it going to be a moderate economy in which allows stocks to stay high, or is the Fed really going to do the old 1-2 on the economy, keep these rates high, maybe even jack them up a bit more to get the stock market down further, and then ride to the rescue later on, which people are arguing they won't do. A lot of prominent Fed watchers are saying they're not going to do that, which I think is wrong. I think that when the time comes and they need to get the economy going, they will jack up the stock market again, because that's basically the only game in town. The only way that would not happen is if they just said to Congress, look, we've done what we can do. It's time for you to do your job. And that's probably not going to happen. So, is the Fed put a thing of the past? The answer is no. Fed put is still there. People are still betting on it, and it's still something that can be relied on in the future. The Fed is not going to do away with the Fed put. They'd like to. They'd like to change the perception, but they're not going to be able to do it. And this has been another episode of Random Thoughts from the Crazed Mind, the worst channel on YouTube. Thanks for watching, YouTube.